All right, again, hello everybody. Welcome into the options training room. We like to hold these webinars every couple of weeks or so just to make sure you have an opportunity to ask questions in real time. You can hear from us directly. We can review some of the common support related questions that have been coming in. So if you have any topics that you would like to see us cover here today, make sure you type those into the chat and I will get to those as soon as possible. I do have an agenda here today that I would like to get to, but we can certainly be flexible. If there's topics that you want to hear covered, we'll certainly talk through any and all of those that come in here today. So this is really meant to be a session for you guys. If you've been hanging on to any questions you're not quite certain of, please let us know. That's what we are here for. I will be recording the session from start to finish, so if you can't stick around the entire time, we will go ahead and get the recording posted on the owner's website later on this evening. So we typically like to keep these right around an hour, give or take a few minutes, so that's the goal for today. Just real quick, as far as overall markets go, just giving everybody another minute or two to log into the room. We've seen a lot of incredible back and forth movement over the past few weeks. Now, why has it been incredible? I mean, we really haven't gone anywhere. We just moved straight sideways. And that is true, but the extent of these moves that we've had intraday, they've been truly impressive. Normally, when you start to see a market that's moving 500-600 points at a clip, on the Dow that is, normally you would see that develop into a longer term trend. A trend that would stay in place for a period of days or even weeks. We have seen none of that here of late. Going back earlier in the year, we've had really nice swings back and forth. The first quarter was an impressive move to the upside. We had a couple of pullbacks there, one in May and then one just here recently. But any type of selling that we've had has not lasted long and has just led to another wave to the upside. This has really been the first stretch over the past couple of weeks, the first stretch this year that we've seen a lot of choppy, indecisive price action. And it's been one of the more difficult markets that we've seen in quite some time. If you're a day trader, yes, you're probably enjoying the really good intraday swings. As a swing trader who's looking to take positions for a couple of days on out to a couple of weeks, it becomes more challenging because there's just no follow through. You take a look at the past 4 trading sessions. Right? I mean, you've had big moves in both directions with zero follow through into day 2. Here we are today, midday. You've got the Dow up 200 points. You've got the S&P up 16. The Nasdaq's up 22. Normally, when you see those types of moves, it's enough to lead to some follow through into the next couple of days. And we haven't had that lately. So you have to be very careful with the strategies that you use, very careful with position sizing, which we'll talk about here today. As much as we all want to get aggressive, as traders, we love to see the active markets. We love to see the big profits. It's important to understand what the market is giving us. And it's important to take what the market's giving us instead of trying to force one strategy or one type of options position to work. What I mean there is if you're going to limit yourself to just buying long calls and long puts, this is the market that you're going to struggle in because there's no follow through. If you open your playbook up to use some of the vertical spreads that we talk about, the debit spreads, the credit spreads, you're going to find it far easier to get through stretches like this without a big drawdown in your account. Doesn't mean you're going to win on every trade. We know that we're always going to have winners, losers, and break-evens. But if we continue to use proper diversification and keep our risks small, the numbers will work out in our favor, even when we're in a very tough trading stretch like we're in now. Now, from a technical perspective, what do I expect here in the near future? The nice part about this market, as difficult as it has been lately, it's given us some pretty clear support and resistance levels to track. Over the past couple of weeks, we have tested the 200-period moving average 5 times. We have tried to move below that level 4 times, and we have closed back up above each time. Anytime that we test that level intraday, it's this solid red line on the chart. You can see that we've tested it. We've tried to probe below it intraday. It has held every single time. That is very clear our line in the sand on the downside. If that level breaks on a closing basis, if we get a session to close below that level, we could certainly see a bigger wave to the downside. If that level holds and we continue to move higher, there's a couple of areas that we want to watch. First of all, we've got this whole cluster of moving averages just up above us. And then we've got this swing high right around 294. Those are levels on the upside that we would want to see broken. Until one of those two areas break, it's going to be a lot of back and forth. A lot of bouncing back and forth inside of that range. That's why we've been using a lot of credit spreads. We've been using a lot of vertical spreads in general, because that's what the market's giving us. I'm open to trading long calls and long puts. I certainly want to sprinkle them in, but until this market starts to break out in either direction with more follow through, we want to be careful what strategies we are using. So if you're brand new to vertical spreads, don't get intimidated by them. We do have training videos on the owner site. You can certainly ask questions inside of Slack or inside of these Q&A webinars so we can cover them in more detail. You will be far better off. That's really the breakthrough moment that I had as a trader back years ago. When I started to use some of these different strategies, that's when I started to see more consistency. The first couple of years of my trading, all I did was buy long calls and long puts. When the going is good, if you have a stretch like we saw in the first quarter where the market's very active, there's a lot of money to be made. But what I found is when you get into stretches like this, where it's choppy and no follow through, that's when you end up giving all that profit back and then some, and then you're just left in the long run spinning your wheels. One way of getting a smoother growth in your equity curve is to use a wider range of strategies, a wider range of expiration cycles, right? And that's what's going to really separate you from many of the other traders out there that never hit their profit goals that they're looking for. So just wanted to cover that real quick. I've had questions come in, why are we, I thought we'd be trading more long calls, long puts. Well, we'll certainly get back to that. But again, we're very committed to taking what the market's giving us. And right now the market is very clearly just flashing a warning signal. This is not the time to get ultra aggressive. There's things that we can do certainly, but it's not the time to load the boat here and just say, okay, we're 100% bullish, 100% bearish. It's just not the environment to work with there. Bob, because of the current market conditions, I've been getting stopped out of my trades. Under these conditions, should we even use stops? So, Bob, on a long call, long put, or a debit spread, yes, you'll want to use stops. With a credit spread, I do not use stops because they have multiple ways of making money on the trade, because they will recover in many cases the longer we hold, because that time decay is helping us. It allows me to hold on to positions longer and not have to worry about stops. I would say, if you want to give your trades a little bit more room to breathe, that's one thing. I don't have a problem with that, as long as you keep your risk small. But we know out of this action, we know this type of movement over the past handful of weeks, this sideways move, we know that at some point we're going to pop out of this range. We just don't know when it's going to happen, nor do we know in which direction it's going to happen in. So we know things will open up. So I don't want you to reinvent the wheel here, completely deviate from your trade plan, because we know this is not the new normal. I expect volatility to stay around for an extended stretch. I don't expect volatility to completely fall off a cliff again, but I do think we'll start to see more sustained movement back and forth for longer than a few hours at a time. So I think the biggest key in this type of a market is just to trade small, and we'll circle back to that here in just a bit when we talk about risk management. Here's some topics that I want to cover here today. We're certainly not limited to these, but I know we've got a number of new people that have joined here recently, and a big welcome to you all that have just joined recently. We'll review some of the basics of the system, how to make sense of the alerts, how to take those trades, how to receive the alerts, and then we'll spend some time on position sizing as well. So real quick, an update on the NetPicks app. We have released it at this point for the Apple phones, so any type of an Apple device, you can go ahead and download the NetPicks app. We have been making some changes here lately. I mentioned when we first released it that it was going to be a work in progress. There's going to be changes that we're going to be making. There's going to be tweaks that we'll make to the setup. And we're doing that based on a lot of feedback from you guys. So those of you that have sent in feedback, we really appreciate that. That really allows us to develop the tools and provide what you're looking for. I'll talk about some of those changes in just a second. If you are an Android user, I just talked to my programmer here yesterday afternoon. He is working on the final wave of changes to the app. We are looking to have it completed here. You should have the Android version of the app in your hands next week, unless something completely falls apart in the next few days, which I know is entirely possible when you talk about technology. But we've worked through a lot of curveballs here. We're almost ready to have it out. So we should have that ready to go here sometime. I'm shooting for early next week, but we'll certainly keep you posted on the official dates that it will be available. Now, a couple of the changes in the Apple version of the app. Down at the bottom, you've got those different sections of the app, the different tabs: trade alerts, position sheets, blog, trade chat. Let me quickly walk through some updates. On the trade alerts tab, you'll notice that we did add a refresh button that you can click on. So if you see a notification pop up on your phone, for example, a notification saying, hey, we just sent out a trade alert, and then you come over to the trade alerts tab, and you're not seeing it there, you can hit that refresh button, and that'll fix a lot of the issues there. So nice feature that we've added. We're also in the next release going to be adding the ability on the login page. We're going to add a forget password link as well as a reset password link. So we send you the login details initially. If you want to change those details, you can change the password. Instead of having to contact us, we'll give you the ability to change it on your side. So it just saves a step for all of us. The position sheets. We have added a back button here as well. And we've also added a page that you'll see that you'll have to click on. It says NASDAQ Options Superstars. Click here for position sheets. We've added that because we will be using this app for some different products on our side, not just for the NASDAQ service. So we're going to build in the ability for us to add in some additional features going forward. So there's an added step for getting to the position sheets. You'll notice we do separate these by trade type. We also have a section down there for closed trades. So you can track long-term performance there as well. Some of you have noticed that we have changed the layout of the position sheets, trying to make those a little bit user-friendly. In previous releases, you would have to turn your phone sideways, turn it into that landscape mode in order to see all the details. We have changed the layout of the alerts. That way you do not have to turn your phone sideways, turn it into landscape mode. You can just use it in that vertical mode. So we've changed the look and feel there of the alerts. The blog, I'll have the ability to add in additional features here. I can add in screenshots. The video function is much better here just over the last few days. Some of your feedback on the high def videos. We, unfortunately, with some of the software that I was using to produce the videos, I had to get some updates to that software, so we're able to get better quality on the videos. I'll be able to post more information on the blog inside of the app as well. And then the trade chat feature. It's certainly not as active as Slack, but if you ever have a question, comment, concern, you can always go over to the trade chat and post a message right from inside of the app. The question that I get most often right now is, what should I be using, the app or should I be using Slack? Both are really nice platforms. If you're somebody that just wants the trade alerts, you just want the video updates, you don't want to have the interaction with other traders throughout the day, the app is going to be a far better resource there. If you're somebody that likes that interaction with other traders, with our coaching team, the Slack platform, that general channel, is a really nice way to get questions answered pretty quickly, interact with other people. So I've got a lot of people that like to use both, and that's perfectly fine. It's just not required. I don't want you to get overwhelmed thinking, hey, I've got to use email and Slack and the NetPicks app. You don't have to. You can use one of those three or all three. It does not matter to us. We're just providing different ways of delivering the alerts depending on your preference. So we'll continue to add in features in the app going forward. I will give you a reminder. I sent out an email here a few days ago. Highly recommend, because we are releasing some updates on our side, highly recommend that if you have not logged out and logged back into the app here recently, go ahead and do so. And I recommend that you do that once or twice a week. There are some changes that we're making on our end, on the server side, that you would not get unless you log out and log back in again. So highly recommend that you do that periodically just to make sure you get any updates that we have released. So that is the NetPicks app. Let me just quickly look at the chat box. Bob, so with credit spreads, just do not use stops. Yes, I do not use stops on credit spreads. I'm not saying that I won't ever close out of trades early. Okay, we could potentially do that, but I do like to hold credit spreads longer. I don't really like to use stop orders in general because I don't want market makers to see those stop orders. Anytime that I have a stop in place or a stop in mind, it's a mental stop. I just don't like to have those orders working. Sean, did you say you don't have a stop on the credit spreads? I have BTC buy to close at 50% on the first trade on BABA. Should I remove this? Yeah, so I personally do not like to have stops in place working. If you're somebody that's busy during the day and you don't have access to the markets and you would feel more secure about having an order in place, I don't have a problem with that. But for me, I like to use a lot of price alerts for myself. So I'll set a price alert to notify me when an option or a spread is trading at a specific level. That way I can manually go in and place those orders. It's just for me, I don't like to have my stop orders in place working because I don't want the market makers to see those. And then also, if you're going to use a stop order, there could be times that you get bad fill prices. If I use a price alert to notify me that when we're hitting a specific level, whether it be a target or a stop, I like to manually go ahead and place those orders because now I can work the order a little bit and potentially save a few pennies. That can add up over a year's time. It does take a little bit more work. If you've got an order in place working, yes, that order's working and you don't have to sit there and babysit it. But in exchange for that ease of use, you could potentially be giving up some on the price. Now also, it helps to have a mobile platform because I know I've got my phone, I've got my iPad with me pretty much all day long. If an alert triggers, it's not something where I've got to scramble back to my computer and get an order placed. I can pull out my mobile device and place an order within 60 seconds. I mean, it's very, very easy to do that. So yes, I do not like to have actual stop orders working for myself. Beyond Meat and VXX expiring Friday, any action? So Beyond Meat, that order, that trade is still in place. It's still working. Beyond Meat, I've traded it now really since the options were made available on the product. This is really the only trade that I've had a terrible time getting filled on, trying to get out of a closing position. So I still have the trade on. I am looking for a move lower over the next few days. I need price action down around 155. So I'm still holding it. I'm going to hold it into tomorrow. We'll most likely take action tomorrow. When it's time to take action, I will certainly let you know. We do have 2 VXX positions on. Both of those are with the September 20 monthly options. They'll still have over 20 days left expiration, so there's nothing we need to do there. And while I'm on that topic, the position sheets, I update this on the owner's website every day. It's also, all this information is made available on the NetPicks app as well. So if you're ever curious as to what positions we have on, what prices did I get filled at, where are our target levels, all of that information can be found on this position sheet. And I do separate these by trade type. The page that you're looking at here, these are all our short call spreads that we have on. And you'll notice that the 2 VXX trades that we have on are both using the September 20 monthly options. So we're still holding both of those. We've talked about it in previous video updates. When you get the VIX elevated, like it has been the last few weeks, we don't typically stay there very long. This has been one of the longer stretches where we've had volatility elevated. Anytime that you get a spike into the low 20s on the VIX, it typically will stay that way for a couple days, maybe a couple weeks, and then start to contract. And the VIX can move 10, 15% in the blink of an eye. So do we need some help on these VXX trades? Yes, but if this market decides to bounce here over the next few days, these are going to be right back on the dance floor. So with over 20 days left expiration, nothing we need to do on those VXX trades. On those position sheets, I will always post our target levels. The target levels on a credit spread will always be between 50 and 75% of whatever we collected to put the trade on. That way you know ahead of time where our desired profit range is at. I will always let you know when we're taking action on our side. When we're taking a trade off, whether it be with a partial profit, a loss, we're always going to know right away from us. So I'm not going to just leave you hanging on a trade. You're more than welcome to ask inside of Slack or send us a support email asking about a specific trade, but I don't want you to think that you're just left fending for yourself on those positions. Once they're open, we'll keep them open until you hear from us, until we send out that closing alert. There's nothing to do on those positions. The BABA trade is a debit spread, not credit stop on 50% is okay on those. Yeah, so anytime that we're buying an option or buying a spread, we do use a 50% stop. Again, I don't actually have those orders working. It's just a mental stop for me. So if I do see that trade down 50%, we would go ahead and close out of that position. Excuse me, guys. I've been fighting off a cold here the last few weeks, and just about on a daily basis. At this point in the day, my voice starts to go. So I'm trying to grab some water so my voice will hang in there for another half hour. So why do you use that 50% stop level on a long option, but we don't use a stop level on a credit spread? The moment we buy an option or the moment we buy a debit spread, the time decay is hurting us. It's like holding a ticking time bomb. It's okay in a lot of cases because if we get a directional move in our favor, it's going to be enough to offset the time decay. But if a trade's moving against us, we want to limit that damage, because when a trade starts to go against you when you're long an option, it's more difficult to get that trade to battle back. With a credit spread, the time decay is helping us. So it allows us to hold the position longer. It'll allow us to battle back much faster on those trades. That's why I'm willing to hold longer on those positions. So there's just a big difference in just how those trades work, how they move. So we do handle those differently. All right, let me circle back to the slides here. The owner's website, I've got it up here on my screen. This is the main home base for the program. This is where we have all of these setup instructions. This is where we will post the training materials. This is where we'll post the position sheet so you can track long-term performance. Please note, depending on the size of your monitor, you will need to scroll down to see the different sections of this site. I've had some feedback. I've had some people that get intimidated by the training videos. Please note, it is not required to go through all those training videos in order to use the system. They are there for a bonus feature for those of you that are just starting out trading options. Maybe you're newer to your broker platform. We provide those resources there as a way for you to get up to speed faster. If you have traded options for years, if you're very comfortable with the strategies that we use, you don't have to do anything with those training videos. I don't want you to think that you got to spend days on end reviewing training. It's just not required. It's just a bonus. The main meat of the program is the actual trade alerts that we send out each and every week. I do like to post a few recaps each week. You'll notice I post those. I'll typically post them here inside of the owner site, inside of the Slack group, also on the NetPicks app. So typically they're 15 to 25 minute videos just walking through our open positions, any new trades that set up. So I do try to post those periodically throughout the week. The daily outlook, that is a spreadsheet that I post every morning. Again, it's just another added bonus feature. If you never do anything with it, that's perfectly fine with me. You're not gonna offend me. It's just another bonus that we post. And what it is, go ahead and download it here. What it is just a look at the previous session, some of the key stats that I like to track. High, low, close, volume, just kind of give an overall outlook as to what the market's been doing. And then I get into some of the details of what to expect for that current session as far as news events go. What potential new trades am I looking at? Please note that these trades on the trade idea watch list, those are trades that are setting up as of that morning before the market opens. Once the market opens, if we get a big move intraday, that could certainly change things around. So I don't want you to think that if I put a trade idea on this watch list that we're guaranteed to take a position on that name. In many cases, our new trades will come off of this list, but we're not tying ourselves down to this specific watch list. We can certainly react to markets intraday. I give a quick glossary down at the bottom. if you're looking at some of these stats saying, I don't know what the trend is, I don't know what the put call ratio is, I do give a quick explanation of what those numbers are. So I do post that every morning. I try to get it out as early as possible before the market opens, so you can take a look, kind of get my thoughts on the overall market. So that can be found on the owner's website as well. So I do recommend that you get into that site. It's not something you've got to log into every day, but, try to get in there once or twice a week or so just to make sure you're not missing anything. We'll also post any type of an upcoming webinar, for example. Any of those login details, you can always find them right on the owner's website. Broker options. I know some of you are still working through what broker to use. My thought on this, you can go a number of different routes. There's so many brokers out there these days. These are the most popular ones that we find our students using. I use the top two on this list, Tastyworks and TD Ameritrade. I use both of them. Tastyworks would be my preference at this point. They have the lowest commission rate. They've got a really nice platform. But again, if you wanted to use any broker out there, that's fine. But what I would tell you is don't lock yourself into one specific broker. I talk to people on a regular basis that say, hey, I've had a long-standing relationship with E-Trade or with Interactive Brokers, and that's fine. I fully understand that, but remember, this is a business, right? And we've got to make sure that we have the proper tools with the lowest pricing possible. For example, TD Ameritrade, I've been using them for years. Okay, I've been using the Thinkorswim platform basically since it was released back in the early 2000s. But I switched over to Tastyworks last year. I've moved a good majority of my money over to Tastyworks. Why was that? Because they saved me a bundle on the commission side. It was a huge savings. As much as I love TD Ameritrade, they've been good to me. If I can save money on my side, that's what matters to me. Now, I still have money with TD Ameritrade because bottom line is technology breaks. And there's been times where, a platform, something will happen where it's not working properly, or maybe it goes down for a few hours. I need to make sure I've got a backup there. So I still have money with TD Ameritrade. I've got multiple accounts. Not required, but just something I find works for me. So any of these four are really good options to look into. Tastyworks, if you're just looking for the lowest commission cost, hands down, they're going to be the lowest out there. So if you have any questions on those, need help selecting one, feel free to send me an email. We can always connect and help you out with that. Really quick on the Slack platform. Slack can be downloaded to any type of a mobile device, any type of a computer, a tablet. It's super nice. It's super easy to use. A couple things to point out. When you log into Slack, on the left-hand side, you will see the channels there. The trade channels are going to be the credit spreads, the debit spreads, and the long calls, long puts. Those are going to be the channels where you're going to find the trade instructions. Please, please, please do not post questions or comments in those channels. We like to reserve those specifically for the trade alerts. That way, for people that are busy at work, you're not getting bombarded with alerts every time somebody posts a question in those channels. So if you have a question, feel free to ask. Just do so in the general channel. That's where we have general discussion and general questions that can be asked. Now, the reason for that is inside of Slack, you can adjust the notifications. Inside of each channel, you'll see on this screenshot, I have selected the general channel. Up at the top of that channel, there is a little gear icon that I have boxed in red. If you click on that, you will see an option there for notification preferences. Once you click on that, you can select how you want to be notified when a message pops up inside of that channel. The general channel, depending on the day, can be pretty active. And I know there's some of you that don't want to be bombarded with alerts all day long, and I don't blame you one bit. So what I recommend that you do is for the general channel, when you come into notification preferences, go ahead and click on the little bubble for nothing. Just turn all of the notifications off for that channel. You can always come back end of the day, scroll back through the general channel to see what discussions were there. Maybe there's some questions asked that you were interested in. You can always do that after the fact in the evening. By turning the notifications off, it'll greatly reduce the number of notifications that you see pop up on your phone or on your computer throughout the day. For any of the trade channels, so debit spreads, credit spreads, long calls, long puts, I do recommend that you keep those notifications on. That way, anytime that I send a message about a trade, a new trade, closing out of a position, you're going to be notified. A notification will pop up on your computer or pop up on a mobile device. So keep those notifications turned on. And again, you can do that right from inside of each of the channels. You just click on that little gear up at the top and go to notification preferences. Inside of your mobile platform, once you have downloaded Slack, part of that setup process is Slack will ask you, do you want the notifications turned on? If you did not turn those on during the setup process, you can always come back and turn them on. So go to the settings button on your phone. Scroll down. It'll show you a list of all the apps that you have on your phone. Scroll down to where you see Slack and click on the Slack icon. That'll take you to the settings for the app, and this is where you can turn the notifications on a mobile device. So again, if you have any questions on that, let me know. We're certainly willing to connect and help out with that. So just let us know. And then also I should circle back while we're talking about alerts, since we cover the NetPicks app as well as Slack. On the owner's website, in the setup instructions, we do give you the ability to set up email alerts. And we do this, the reason why we don't automatically register the email address that you use to sign up with, we know that some of you have multiple email addresses. And some of you have set up email addresses specifically for these trade alerts. So we give you the ability to register the email address that you want us to deliver the alerts to. So just make sure you come to this page, register the email that you would like us to use. Once you opt into that list, that's the email that we will deliver the alerts to going forward. That's if you want the email alerts. If you prefer to use Slack or the NetPicks app, that's fine. In fact, those are going to be more reliable. You're going to get the alerts faster through Slack or the NetPicks app. Email can take a little bit longer, and there's definitely been times where people miss out on things because those emails get stuck in a junk or a spam folder. So not a deal breaker. You can still use email alerts. Just make sure you have our email address whitelisted so they don't get stuck in a junk or a spam folder. Thomas, does Tastyworks or Ameritrade work with the NinjaTrader 7 platform? Well, you can use NinjaTrader for your charting, certainly, but there's no integration there. I would use Ninja for your charting and then use Tastyworks or Ameritrade as your broker and actually place the trades inside of their platforms. On Amgen, it went up to 210 in the money this morning and is now back to 207 out of the money on our trade. In this situation, would you ever consider rolling the 207.5, 210 credit spread to 210, 212.5 and adding 20% or so risk to make the roll free? So I'm not opposed to making adjustments on trades. I'm just very slow to do so. Because in many cases, the problem that a lot of people face when rolling positions is they do so too quickly. And when you do that throughout the year, depending on your broker, depending on your commission structure, it can get expensive to roll positions. And in many cases, it's just not necessary. Because in a lot of cases, if you wait a couple of days, price action will come right back in your favor. Not saying Amgen's guaranteed to be a winner. We have no idea what it's going to do in this case. But in a lot of situations, because those credit spreads will recover much faster for us with time to keep helping us, it just takes patience. So I'm not going to tell you that we won't ever roll positions. I'm just slow to do so. I find that there's a fine line there. And a lot of times people struggle because they overmanage positions. So I have not done anything with the Amgen position. I haven't made any adjustments or anything like that. We'll just continue to hold the trade as is. Bob, would you mind reviewing the methodology used in NOS for selecting stocks to trade? Yeah, we can do some of that, Bob. Remember, this is not meant to be a full training course. The indicators that we use to generate the setups are proprietary. So we have never released them with our methodology that we use for NOS. We've never released that to anybody. So some of you that have been longtime NetPicks customers, you may have noticed and recognized some of the indicators, but we use them differently than what we've used them in the past. So I did record a video yesterday covering BABA and why it was a setup for us. We'll certainly do more of that going forward. But again, this is really meant to be a signal service where we're going to do the hard lifting for you, identifying the trades. Carlos, filled on BABA at 190, would the target be 380? Yes. So anytime that we buy an option or buy a spread, our initial target zone is 100% return. We're looking to double our money on the position. Ed, where's the video on BABA? It's on the owner's websites. It can also be found on the blog section of the NetPicks app if you're using that. And on the owner site, if you scroll down, you're going to see a section for trade recaps. And the first one there on the list is the BABA trade. So yesterday I posted the video here inside of Slack, inside of the NetPicks app, and then also on the owner's website. That way, depending on, which platform you're using, you'll have access to the same content. Terry, where do you sign out of Slack? It just depends on whether you're using the app or if you're using just the Slack website. So if you need help with that, I don't actually have the Slack app up on this computer, but if you need help signing out, let me know. We can always connect and help out with that. All right, so when we send through a trade alert, I just want to quickly review what we do with the alert. We try to keep these alerts as short as possible because I know if you're busy throughout the day, if you're busy working and you're busy doing other things, you want to be able to come in and quickly make sense of the material. We can always circle back and provide more information after the fact if you need it, but I want to give you the necessary information that you can use to get the alert placed or get the trade placed as quickly as possible. So we're always going to start out the alert by telling you whether we're buying or selling to open. If I'm buying to open, we know that's always going to be either a long call, long put, or a debit spread. If this says sell to open, it's always going to be a credit spread. So right there, right from the beginning of the alert, it's telling you whether we're buying or selling. Anytime that says buy to open, we're always going to be doing the trade for a debit. Anytime it says sell to open, we're always going to be doing the trade as a credit. We then give you the symbol and the name of the stock that we're trading. We then give you the expiration cycle. So in the case of this one on the slide, it was 21 June 19. That is important. I can't stress this enough. I've talked to numerous people that end up putting on the trade on with the improper expiration cycle. Make sure you're selecting the proper weekly or monthly cycle. Very, very important. We then list the actual option that we're trading and the price that we're looking to get filled at. So in this case, we're looking to buy the 77.5 puts for $2.15 or better. Anytime that I am buying an option, I'm looking to get filled at the lowest price possible. In this case, $2.15 or lower. If I'm selling a credit spread, we want to collect as much as we can. So I want to collect the highest price possible. And then I just give you extra confirmation telling you how many days are left to expiration just to make sure you're looking at the proper expiration cycle so you don't get caught in the wrong trade. So that's a long call or long put. Debit spread, very similar. Credit spread as well. You're always going to have all of the information here. This is a credit spread on AMD where we were selling to open. Again, we give you the symbol that we're trading. We give the expiration date that we're trading. And then we tell you the strike prices. So in this case, it was the 19-17 put spread. So in other words, we were selling the 19 put and buying the 17 put at the same time. I give you a range of prices here in many cases. As long as you can get filled inside of that range of prices, I don't care if it's a few minutes later, few hours later, or a few days later after the alert comes out. As long as you can still get inside of the range of prices that we post, I'm okay with that. Because in this case, this was a credit spread. We're selling to open. I want to collect as much as I possibly can. So in this case, I would like to get my order placed near the higher end of the range of prices that I post, closer to 52 cents. It doesn't guarantee that you can get filled there at 52 cents. If you can't get filled at that higher price, if you adjust your order lower, The lower the price goes, the higher probability you're going to have of getting filled on that position. So in a lot of cases, people ask me, okay, if I send a range of prices, where do I place the order initially? A good starting point would be the mid price. So split the difference between the prices that I post. Place the order at the mid price. So in this case, place it at 48 cents or so. 48, 49 cents. That would be a good starting point. You can always adjust the order as needed to try to get filled. So as long as we can get filled inside of that range of prices, we are good to go. Sean, if the market has moved by the time we get to the trade alert, at what stage do we consider not to enter the trade as we have missed the boat? So hopefully, I know your question came in a few minutes ago, Sean. Hopefully I just answered that. As long as you can still get in the range of prices that we post in the alert, I'm okay with that, even if it's a couple of days later. If you ever have a question on that, you can always ask inside of Slack. You can ask inside the NetPicks app. You can send me an email directly. More than willing to help out. If there's any questions on whether a trade is still tradable or not, if you can still take it, let me know. I'd rather have you ask rather than kick yourself, a couple days later saying, man, I shouldn't have done that. So rather have you ask questions right up front. And I do my best to try to get back with people on Slack as quickly as possible. Typically, I can get to things within a few minutes. There's times I might be on the phone and I can't get to it right away, but you'll get a pretty quick response inside of Slack. Is the AMD trade still valid? I would hold off at this point. I would just, if you did not take it initially, I would just wait for the next setup at this point. And then as far as placing trades, I should point this out. Let me bring back the owner's website a second. Under the training video section, I have added a post there for how to place orders inside of Tastyworks and Thinkorswim. And if I click on that post, you're going to notice that I've got a couple of different videos there. The reason why I can do this for Tastyworks and Thinkorswim is because I use those platforms personally on a daily basis. I'm very familiar with those platforms. If you're using TradeStation, if you're using Interactive Brokers, E-Trade, not saying that they're bad brokers, I just have never used them personally, so I'm not going to be the best resource there to walk you through how to place trades in that platform. Thinkorswim, Tastyworks, I use them on a daily basis. Not going to call myself an expert, but I do know enough about the basics to be able to help out with most questions that can come up there. If you're using one of those other platforms, highly recommend that you either go to that platform website or go to YouTube. You're going to find endless resources there for any broker platform that you're using. So if you go to YouTube and search for how to place an order in E-Trade, they're going to be able to show you any video there that's needed to get you more familiar with the platform. So I will always direct you to those videos first. And then if we do need to connect, if you need more detail on a specific topic, let me know and I'll be in touch right away. Mike, is it okay to scale out of a credit spread position by, say, buy back 1/3 at 50%, 1/3 at 65%, and 1/3 at 80% of max profit? Yeah, I wouldn't have a problem with that at all. I think that's actually a good move. If you're trading multiple spreads, yeah, it's pretty smart. I mean, I think that's good money management over time, so I would not have any issue with that at all whatsoever. We'll always let you know what we're doing on our side, how we're managing the trades. But if you want to take it a step further, if there's other money management rules that you feel more comfortable with, that's fine. I don't have a problem with that at all. As long as it makes sense, right? As long as you can back it up through numbers and statistics, I'm perfectly fine with a filter like that. All right, let's talk about position size because this is an important topic. I should have started out with this topic. That's how important it is because I continue to see people making mistakes on this topic on a daily basis, and it drives me nuts. It can save you a lot of headache if you use proper position sizing. Now, let's talk through a couple of different approaches here. First of all, do not just trade one contract or one spread on every trade. I know this is natural when you start out with a program or start out with a system. It's like you get into that test mode, right? And you're saying, hey, let me convince myself that this thing works before I use any type of bigger size. The problem with that approach is using one contract or one spread on every trade does not make every trade equal. If I trade one contract on BABA and one contract on AMD, those trades are not equal. BABA is going to completely dominate your P&L. It's a bigger product. The options are more expensive. You might have $500 tied up or more in a BABA position and maybe $100 in AMD. Well, if AMD wins and BABA loses, the loss on BABA is going to completely wipe out your winner on AMD. So you want to try to avoid that. You want to take an approach where you've got a similar dollar amount at risk on every trade. And it does not matter to me what the dollar amount is. It could be $200, $500, or $1,500. It all depends on your account size. This might have you trading one contract on some names on your list, and you might be trading 4 or 5 contracts on other names. People get intimidated when they hear about trading 4 or 5 contracts or 4 or 5 spreads. If you're a newer trader, I know that can be intimidating initially. But by taking this approach, if you can risk a similar dollar amount on every trade, now all of a sudden the outcome of one trade does not dominate your P&L. If I am risking $500 on BABA and $500 on AMD, if I have a winner and a loss, I'm still going to be up money. That's going to make a huge difference long term, especially considering that we're going to use a pretty wide range of products, pretty wide range of price points, pretty wide range of option strategies. So keeping a similar dollar amount per at risk per trade makes a huge difference. If you run the numbers on that, you'll see what I'm talking about. It's going to make a huge difference in your P&L over time. Now, keep the risk at 3 to 5% of your account per trade. So when you're sitting there saying, okay, what's my dollar amount? Is it $200? Is it $500? Is it $1,500? A lot of people teach keep your risk at 1 to 2% of your account per trade. And I wholeheartedly agree with that approach if you're a day trader because it's so easy to overtrade. As a swing trader, we're not taking multiple positions on a daily basis. As a day trader, when I used to day trade years ago, it wasn't uncommon for me to take 20 or 30 trades in a session. As a swing trader, I'm looking to take, in many cases, we're taking 1 or 2 new trades with the system each day. We're typically looking for 3 to 5 trades each week. So because of that, it's more difficult for us to overtrade. I don't have a problem bumping up that risk to 3 to 5%. What you don't want to do is get into a situation where you've got 25% of your account at risk at one time. I just talked with a student the other day who had, I believe it was around a $12,000 to $13,000 account, and they were risking $1,400, almost $1,500 on one position. That risk is too large for that account size. So many people pick their position size based on the profit potential. They get that profit number in mind. They get that profit goal that they want to hit. And they lose sight of the risk side. Very important to keep that risk small. We're focused on consistent returns over time. We're going to have wins, losses, and break-evens. We're going to have winning streaks. We're going to have losing streaks. That's part of trading with any system, with any product out there. We never want to take that risk that's so large where 1 or 2 losing trades could potentially impact whether you can take the next trade. So keeping that risk small will make a huge difference. That's what's going to separate you from other people out there that are struggling to hit their profit goals, the people that are blowing out those accounts. I'm always amazed at how many people I talk to on a daily basis that come to us saying, hey, I just blew out an account, and this is probably the 5th time I've blown out an account. It bothers me because it just doesn't have to be like that. It doesn't have to come to that. If you use proper risk management and focus on small, consistent gains, you're going to set yourself up for long-term success. We can always scale things going forward. As that account size grows, we can add that other contract, that next spread. You never want to get into a position where you're trading too large because that's what typically leads to emotional decisions being made. And I know a lot of this sounds basic. And some of you might be saying, okay, don't need to hear this. I'm just going to log out. But it's crucial. Everybody needs to be reminded of this on a regular basis. When we have a trade go against us, it's without fail. If a trade starts to go against us with the service, you guys would be amazed at how many emails and how many phone calls I get from people that are almost in a state of panic. What do I do? This trade's working against us. I understand none of us like to lose money. I don't like to lose money. None of us do. We've worked way too hard for our money over time. But as a trader, we know that we're going to have winners, losers, and break-evens. Following our criteria, we're going to be able to put the numbers in our favor over time. Okay, but that's not going to prevent losses from happening. If you have a 70% win rate with your system over time, it is still statistically possible to have a losing streak of 5, 6, 7 trades in a row. Thankfully, it doesn't happen all that often, but it's still possible. I want to prepare myself for all potential occurrences. Keeping that risk small will allow me to stay more disciplined in my system. So when a trade goes against me, yeah, it's not fun, but I can stay more disciplined. I can stay with that trade until it's time to take the trade off because I know the outcome of that one individual trade is going to have no impact on whether I can take the next trade. So the minute I get a call or an email from somebody asking, hey, Mike, I've got a loss here. What do I do? One of the first questions I ask somebody is, what is your account size? How big of a position do you have on? And I would say 9 times out of 10, when I get those panic type calls, it's because they're trading too big. So when you trade small, you're able to reduce that emotional aspect. It's always going to be there. We're never able to eliminate the emotional aspect completely, but we are able to diminish it somewhat just through position sizing. Now, if you're trying to determine how many contracts you can trade, how do you know what the max loss is on a position? Let's talk about that here. Whenever we buy a long call or a long put, our max loss is whatever we pay for that option. If you're going to buy a long call for $2, the most you can lose on that position is $200 per contract. Same goes for a debit spread. The max loss is whatever we pay for that spread. So we know right up front what the max loss is. On a credit spread, the maximum loss is the difference between the strikes minus the credit that we received from placing the trade. So if I trade a $5 wide spread, there's a $5 difference between the options that we're trading, between the strike prices. And I collect $2 to put that trade on. Our max loss is going to be $300 per spread. It's going to be $3. It's taking the $5 difference between the strikes minus the $2 credit that we received to put on the trade. So we know what our max loss is for all the strategies that we use with this program. We're always going to be in risk-defined trades. Now, we take it a step further than this. On a long call or long put or a debit spread, we like to limit the loss to 50% of whatever we pay for those positions. We talked about that earlier. With a credit spread, our typical loss on a credit spread is going to be in the 50 to 80% range. Okay, so you can use those numbers to help determine your position size, and I'll walk you through that next. The first approach is to assume a worst-case scenario, meaning you're going to take 100% loss on all losing trades. Even though we don't have that happen very often, if you want to base your position size off the assumption that you're going to take 100% loss, it's a way to build in an added layer of safety. So if you're looking to risk $500 per trade and you're going to buy a debit spread for $250, and you can trade 2 spreads. Trading 2 spreads would give you a max loss of $500. That's the first option. And if you're a more conservative trader, that's going to be the best option. Option number 2 is to take what our typical loss is, take that into account. So if we know that we limit our losses on a long call, a long put, or a debit spread to 50%, we can help determine our position size from this. So if we're still looking to risk $500 per trade and we're buying that same debit spread for $250, we could actually trade 4 spreads in this case because our maximum loss would be $125, 50% of our whatever we paid for that position. So this is going to be the more aggressive route. Does not matter to me which route you go. But those having a rule in place is absolutely crucial. Long term, most people are going to gravitate towards option 2. But if you wanted to be a little bit more conservative initially, maybe it has to do with the market conditions being so wild and crazy. If you wanted to use option 1 or use a combination of the 2 over time, that's fine. What we don't want to get into long term is you having $1,500 of risk on one trade and $500 of risk on another trade. That range is too big, and that's what's going to lead to bigger swings in your equity curve. If you want to use different position sizes over time, and if they fluctuate by a couple $100, we can work with that. But you don't want to get into a situation where, all of a sudden one trade has, 5 times the amount of risk. We don't want to get into that type of a situation. Thomas, do I assume the maximum risk on each trade for the 3 to 5% account limit? So I just walked through, I know you posted that a couple minutes ago before I just got to the last 2 slides, but it does not matter to me which route you go. Okay, option number 1 or option number 2, one's more conservative, one's more aggressive. So if you've got a smaller account size, okay, we want to be able to keep that risk as small as possible. Adding in that added layer of safety with option number 1, probably not a bad idea. Dino, what's my outlook on AMD trade for those of us already in the trade? Well, so on that position, if we continue to see the market move higher here, we'll end up closing out of the position. We'll issue the alert, close it out, and take around a 50% loss on the position. That's the worst case scenario on the AMD trade. Sean, how many percent out of total portfolio should we have employed in this strategy at any one time, or does that matter? So Sean, for me, the way that I structure my trading is I don't like to have more than 50% of my account at risk at any one time. For example, if you got a $100,000 account, I wouldn't want to have more than $50,000 at risk at any one time. That's not $50,000 per trade. Obviously, it's spread out across all of our different positions. And it doesn't matter. It could be a $5,000 account, $10,000, doesn't matter. But the 50% number is what works for me. I have other people that use 20%. I have other people that use 75%. It all depends on your situation. I have some people that say, Mike, I'm using $10,000 for this program, but that's only a fraction of my overall portfolio. If that's the case, you can probably get away with having, 75, 80% of your account at risk at any one time. If you're saying, hey, Mike, I've got a $10,000 account and that's all I have to work with, then we're going to want to adjust that number lower. You're probably going to want to be closer to that 50% number. Ultimately, as far as how much of your account you should have at risk at any one time, it needs to be something that you feel comfortable with. I'm more than willing to connect and help you through that. I do not believe there's a one-size-fits-all approach there for everybody because everybody's a little bit different as far as account size and risk tolerance. The key there is to make sure that you're using an approach that you feel comfortable with, that you can stay disciplined to, and again, the outcome of one trade is not going to impact the ability for you to take the next trade. As far as performance goes on the owner site, what we like to track taking positions. When I close out of a trade, I'll show you the profit per contract or per spread, and then I'll show you the results risking $500 per trade. That's how we track it. I'm not saying you have to use that $500 number. You can always tweak it for your current situation based on your account size and so forth, but that's just the number that we use for our tracking example on the owner's website. Sean, just to clarify, on a $100,000 account, your risk per trade would be $3,000 to $5,000. Yeah, I mean, somewhere inside of that range. Again, it's. I wouldn't want you to go above that level. Could you keep that risk smaller? Sure. I mean, we can always tweak it a little bit to make sure that you are comfortable with the overall risk portfolio wide. We do like long-term to have a mix of bullish and bearish positions. I don't like to be 100% bullish or 100% bearish because having a mix of trades allows me to see more consistency in the results over time. All right, so let me load up a chart here. I know we're running out of time, but Bob, you had asked earlier, can we cover what goes into the trade? I can review the BABA trade here really quick for those that did not see the video that came out yesterday. There's a couple of different types of trades that we can look for. There can be directional trades. When I say directional, I'm talking about buying a call or a put or buying a debit spread. And then there can be credit spread opportunities. The BABA trade yesterday came because of our sentiment indicator down at the bottom. It went from green to red. It went from bullish mode to bearish mode. So we went to sell mode, and then we got price action to close below our moving averages up top. We also had our moving averages cross over. So we had everything lining up. That's why we bought the put spread yesterday. Obviously, we weren't expecting the market to rally right back up again today, but it has. So we'll just continue to track this thing over the next few days. See what happens. Worst case scenario, we'll take a 50% loss on the position. The pulse indicator down at the bottom, that is the red and yellow histogram right here. That is going to be the indicator that we use for the credit spreads. And I'll talk about that criteria here in some future videos, what we're looking for out of the pulse. All right. So any questions on anything that we've covered here today? I do like to keep these around an hour. I want to respect your guys' time, but also the people that are watching the recording. I don't want them to spend 3 hours in the evening watching a recording. So we'll try to do these. I try to do them every other week, if possible, just to make sure that we give you an opportunity to ask questions in real time. If you have any questions at all over the next week or two, feel free to post inside of Slack. You can always send me an email directly, mike@netpicks.com. We're more than willing to help out. We are committed to you guys being successful with your trading, so just let us know how we can help moving forward. Thomas, what about adding on to BABA to average down the entry price? I do not like doing that very often. And when I do it, I typically will add to a credit spread because the probability of that recovering much faster, it's higher. If I'm buying a call or a put or buying a debit spread, I do not typically like to add to positions. Because if a trade's going to lose, I want to keep that loss small. I don't want to compound the issue. If Baba's going to lose, I don't mind losing on a normal size position. What I don't want to do is start to double down and then all of a sudden have a much larger loss, because then that larger loss is going to take a couple of winners to battle back from. So I'm trying to avoid that if possible. All right, guys, so I'm going to start to wrap it up for today. If you have any last minute questions, go ahead and get those in now. Again, I did record the session. I'll get it posted to the owner site here sometime later on this evening. And with an hour to go in the session, I will be looking to get a new trade on. So I'm going to wrap this webinar up here so we can get back to the charts. And I'll try to get a new trade alert out here over the next 20 to 30 minutes. Will I ever make adjustments? Roy, yeah, we talked about that earlier. I will make adjustments, but I'm very slow to make adjustments. Because I don't want, number one, I don't want to let a loss turn into a larger loss. I don't have a problem taking a loss, right? As long as we can keep those losses small. On a credit spread, I don't like to make a lot of adjustments quickly because I'm trying to limit the commission costs. In a lot of cases, the credit spreads will recover faster for us. So I don't think there's a need to make an adjustment as quickly. So I'm not opposed to it, but it's going to be more the exception rather than the rule for us. I think that's a big issue that a lot of retail traders face is, knowing how to take a loss. And in a lot of cases, because people aren't willing to take the small loss, they double down or they make an adjustment, they add to a position, trying to defend the position and trying to prevent that loss from happening. And in the end, the loss ends up turning into a larger loss. If we can keep the losses small, it takes a tremendous amount of pressure off our winning percentage over time. Terry, is BABA still a good trade you can get into? I would wait at this point. I would hold off, wait for tomorrow, see if we can get BABA to head back to the downside. You can certainly get in at a better price point than what we posted yesterday, but the trade's going against us. So I like to grab trades. I would like you to grab a trade late when the position's moving back in our favor. In this case, when BABA is starting to head lower. So I would hold off, wait to see what the market does going into tomorrow. All right, guys, so enjoy your afternoon. Again, I'll try to get a new alert out here in the next 20 to 30 minutes or so. If there's anything else I can help with in the next few days, feel free to contact me directly. My direct email is mike@netpicks.com. If we need to connect for a phone call, always willing to do that as well. Just send me an email. We can set up a time to connect. All right, so enjoy the afternoon, everybody, and we'll talk to you here in the next couple days with our next round of alerts.